Good morning, everyone, and we welcome you to another special edition of Markets Technicals at Large with Mlocho. My name is Telbi Mlocho, the official host of Markets Technicals at Large. Now, today we will also consider a pair on a 1 hour time frame. The pair for today is Great British Pound against Canadian dollar. And then you can see that we are looking at candlesticks. And so we have different displays there. We have candlesticks, we have bars, and then we have that. So we are looking at candlesticks because it's easy to analyze the market technically by means of candlesticks analysis. Now, as you know that every day when we do this analysis, we begin by to look specific things. We begin by looking at specific things such as support and resistance. So now I'll look at the active supports. Without wasting any time, I'll look at active supports there. Look at active supports, and you'll realize that we have supports there. Let me highlight the line so that it becomes visible to everyone. Here is our support. You see, there's a point here, important point here. Important point here, and important point also here. Highlight it so that everyone can see. We also have another point here, and then we also see that there's a break here, and then on this break you can see that there is something like equilibrium happening there. We'll visit that. Let me highlight this other active point here. Good. Now we have this active points, and we can see that something is happening also here. These 2 points are on the same line. 2 points on the same line. I'll highlight them. 2 points, 1, 2 on the same line. Now that's where our signals becomes important. At that point, it's very important to know what to do at this point. There's a point there. I'll highlight it also. There's another point here. I'll also highlight it. Okay, I'm done. Denoting active supports. You can see that only active supports there. There is no resistance. There is support. Why am I saying it's a support? The market went here, and then it turned, went up. It turned on this level, went up. It turned on this level, it went up, and then it broke the support. And then when it after that support was broken, the market now is forming a horizontal support. Now was an uptrend support. You can see the market is uptrend. So here it's a horizontal support. So this is where our signal becomes important. You will know how our signal will work when we get to this part. So from now, what I will do is draw what we call an Elliott wave. Draw Elliott wave starting from this point. That will be our 1, the highest point, 2, 3, the highest point, 4, and 5 there, which is another highest point. You can see this is lower high, lower high. We have higher highs there, you can see. So the trend was up. This one is pretty clear to everyone. And then we have 2 active points here. 1, 2, 3 active points. So this trend does exist because we have more than 2 active supports. So this uptrend is confirmed. This was an uptrend. This was an uptrend because of the 3 active support points on the trend line. Give that a color. Now, where do we enter our trade? Because of we can see that we have this, we have that, and then we know that this Elliott wave now coming to this point, it means the market will change the direction. If you watched my previous video, you will know that I explained these things. Now what I do here is analysis. And remember, if you don't understand what I am doing here, if you don't understand what Elliott wave is, if you don't understand what a trend line is, if you don't understand what an uptrend is, please feel free to contact me on this number. Feel free, I will definitely help you. Contact me on this number. I will help you. Now, moving on. Let me start from the beginning. I begin by looking for active supports. I drew a trend line and then I denoted the supports on top of the trend line where the market turns. And then after that, I also looked at the supports on the horizontal level of the market. And then after that, I also looked at how the trend moved up. You can see it moved up in a form of higher highs and lower lows and lower highs, right? Now, that is clearly denoted by the Elliott wave. You can see 1, 2, 3, 4, and 5. From point 5, we know that here the market is likely to change the direction. We know that. We know that around point 5, the market changes the direction. Now, here we place this. This is Fibonacci. We take it up to point 5. We take it up to point 5. Let me take the point 5 there. Just above point 3. Just above point 3 to show that it's a higher highs. Let me bring back. Let me bring it back. Just like this. Just want things to be clear. Just want things to be clear. I'm sure everyone understands that you move from previous low, the lowest point, and then you take it to the recent high. That's how we draw the Fibonacci. And now, why am I drawing the Fibonacci? I'm interested on this point, 0,618, because I know that the market, when it turns here, or when it breaks this line, which is 1,6670, it will definitely reach this point. So on the break of this support, the market will come to this part. Now, immediately after the market breaks this part, then we enter a short trade. We enter a short trade. You can see this is 1 hour time frame. We enter a short trade and we place our stop loss on top of 0.5, just above the black line, which is 1,6771. Now let me place that, and you will remember if you watched the previous video. Now we are on the part of risk management. Now we are on the part of risk management. That is very important and it should not be compromised. It should not be compromised. Risk management first. Now the red line there is your stop loss. Now I'm going to put there take profits. Here is our take profit. I'll put it just above the 0,618. You can see 0,618. Let me put it in a box so that you know why we are placing the take profit there. We are placing take profit here because of this guy. You know, this is where the market retraces. This is where the market changes the direction for that particular moment. You can see that on that point, there's support. You can see the support is here. It's also here. It's also here. So the market will definitely retrace back here. So we are still busy with the analysis. I did not release the signal yet. Some people will say, oh, okay, we sell there, we sell there. No, I did not release the signal yet. Please, guys, please, you will know where is the signal and why I am saying it's there. Now we have take profit there. We have stop loss there. Let me denote that. Please, if you don't understand what take profit is, if you don't understand what stop loss is, feel free to contact me on this number. So stop loss, this is our stop loss at that rate. You can see the stop loss is 1,6797. Give that a red color and then pull it to this point and take profit. Most of the people likes this part where the profit kicks in. I mean, I will understand why people like that part, because the ultimate reason why we trade Forex is because we want to make profit. Simple as that. Now, so the trade will be entered at this rate, 1,6, or immediately after the break of this, then a trade is entered. So it's 1,6670, and then this is where your take profit will be. So let's calculate how much of profit we are expecting from this analysis. So take profit for that, or profit in pips. So profit in pips. Profit in pips, we subtract. I'll go to my calculator very fast. There I'll subtract this rate from this rate, which is 1,6670 minus 1,6491 equals to, okay, 179 pips. 179 pips for that. So 179 pips. That is our profit for that trade. For this trade, the profit is 179 pips. Remember, there will be charges of the pair there. This pair, Great British Pound against Canadian dollar, there will be some charges there. So it might not be this one exactly. It might be 176. If they might take 4 pips away from you, and then you get this. So if you watched the previous video of markets technicals at large, you will know how we use pips to calculate profit. You will know how we use pips to calculate profit. Let me write that and say profit in dollars. Profit in United States dollar. So that will be $1,790 on standard loss. On standard loss, meaning that there you are able to trade on 100,000 units. That is standard loss, meaning that per 1 pip you get $10. Get $10 per pip. So that is standard loss. I'll place it here. Now you can also convert that into rands. If you are like me, located in South Africa, that can be converted into rands. Now that will be profit in rands. Profit in rands. So we also calculate that. Profits in rands, that will be $1,790 multiplied by 13, 13,32. That will be 23,842 rand 8 cent. 23,000 23,842 rand 8 cent. You can see that. So if you are located in South Africa at this position on standard loss, it will make up to this much for you. So you can gain up to this much if you are located in South Africa and you want to calculate your profit in rands. You can also calculate it and leave it in dollars. It's fine as long as you know that you're making profit. Now, pips for this pair is 179. And then you realize that the trade is not entered at this point. You only enter the trade after the break of 1,6670. Enter the trade after this point. So now that is our signal. Signal for today. Signal for today. To go short. Short on the break of 1,6670. Short on the break of 1,6670, and you shall make around that much. It's not exact, it's approximated. Now, should you need any mentorship from us, should you be interested in joining us in our room when we trade live in Pretoria, feel free to contact me on this number. Should you be interested in getting our signals, you can subscribe to our signals. Subscribe to our signals. If you want to subscribe to our signals, feel free to contact me on this number, and then you shall get the signals every day on your phone. Or should be interested in trading with us in our room, contact me on this number for more information. I'll give you the directions and the office number in Pretoria. Guys, I'll see you next time when we verify the analysis, or when we get the results of the analysis of the Great British Pound against the US dollar that we did on Friday. And then when we also get the results of the Great British Pound against the Canadian dollar, which we just did now. And another edition of Market Technicals at Large will be broadcasted later tonight for the preparation of the other pairs and other movements of the market for tomorrow. And you will realize that I only do pairs which are associated with the Great British Pound. You will know that as soon as you come, like if you are a trader already, you know why I'm looking at these pairs. And if not, then I assume you don't understand trading. Then you should contact me on this number, because now here I'm only doing analysis and providing signals to those who already trade. Now, to those who want to begin trading, please contact me on this number. I'll definitely help you on the concepts and how to analyze the market, and why am I using this method to analyze the market. Because of everyone definitely has his own strategy, or has her own strategy. Because of now we use different strategies, we see things differently. As for myself, I'm a mathematician, so this is how I see the technicals, this is how I consider the market. Someone out there is also using another technique to do his analysis. We use different techniques, but then as long as your technique works and then is validated by reasons which cannot be doubted anyhow, then it's fine. You can use that technique as long as it works for you. Just that the technique should be accompanied by risk management. Do not compromise that, guys, please. The risks, very important. You know one thing for sure, that Forex market is very risky. It's very risky. You can lose all of your money, but then all you need to do is to manage those risks and do your analysis, take care of your education, do not compromise it, apply it. Apply it and make sure that you manage your risks with care. And therefore, you will make money without even losing a lot of money. You just lose a bit, yeah, come back, lose money. That's the nature of Forex. You lose, sometimes you win. So guys, thank you. If you need anything from us, call me on this number. Thank you. It's the end of the show.